A lot of people are great with their money. A lot of people are great with being disciplined, but most
I talked someone out of a HELOC yesterday, as crazy as it sounds, because
people have struggled.
but the crazy thing about the credit scores, you're okay until you're not okay. And it'll go from like a 740 to a 640 because you maxed out a couple cards.
If you're not good with discipline and money, don't even get a HELOC, right?
Because life happens, right? You need to make that additional principal payment on your HELOC. The moment you do that, now you're paying that thing off in like 3 years and saving probably 100 grand in interest.
Imagine putting $100,000 into S&P 500 like now, and then letting that vest over like 10 years. Oh my gosh. Thank you for everyone who subscribed and who's supporting us. We really hope that you guys are enjoying and learning something along the way. I'm not sure if you know me or not. Most likely you don't, because 98% of the people watching these videos aren't subscribed. So if you want me to stop introducing myself, hit that subscribe button. I'm Peter, and this is Jason. We are the Clear Close, the mortgage experts that help you get clear to close on your next mortgage. What's like one thing you would say that you're really proud of? What's a takeaway from this experience, this experiment that we're doing on YouTube?
Getting out there, because if you get to know me, you realize how introverted I am. It's like Peter and I are exact opposites. Like I am the 99 percentile introvert, and he's the 999,000% extrovert person. So for me, it's this was a big social experiment because there's no way I thought I would have seen myself on YouTube for sure. And then getting a little uncomfortable, but you know, it is kind of comfortable now. So you just got to break through that shell and do something uncomfortable sometimes. And it means more to me that after talking with a few of our viewers here around regarding their situation and scenarios, because if you click that link in the comment button for a meeting, it's no obligation. You will talk to us. So from what I've seen, it was just eye opening because like you'd watch 1, 2, 3 of our videos, get a good idea, better idea of where you want to be, and then from that point on, we're able to help you plan for the next steps, the right steps, right? For you, because that's the most important.
Right. Yeah, it's really cool, at least for me, because we're still a tiny YouTube channel, and we don't have like an aspiration of becoming like mainstream YouTubers or anything. This is just something for us to provide value to the community. And the conversations that we're having is, a lot of the times it's like debt consolidation. I mean, people are trying to use HELOC as a method to consolidate their high interest debt. So when I listen to these conversations and these stories, it's like it's it's kind of heartbreaking because people are in bad situations, and there's
Very bad situations at times too. So
yeah.
it's like it's really cool too because we talked about Ramsey a lot, and I talked to a Ramsey follower yesterday.
Oh yeah,
And
yeah.
it was a lot of fun. For me, it's like I like Ramsey not because he sells subscriptions to like get better or whatever you want to call it, but like there's no BS. It's like you save money and you're making money essentially, right?
Yeah,
So
you can't argue with
what?
that. You can't
No, you
argue with
can't
that.
argue
Spend
with
less
that.
and keep more,
It's like
right?
it's just there's no BS to it, you know? It's
Yeah.
like you make $100, and if you save $100, it's just common sense, right? There's no like magic to it. And then but when I was talking to this Ramsey follower yesterday, it was just fun because like we were on a like-minded target and goal, right? We want to make sure we get ourselves into a better position financially for our family, for our future self, and seeing like being able to talk to them and see, oh, hey, I'm working on this debt consolidation piece. Like I'm trying to knock out all the non-mortgage debt right now. And I'm like, oh, that's baby step number 2. And
Yeah,
he was like,
nice.
I've been working on the snowball. And I was like, light bulb.
Ramsey.
He's a
Yeah,
Ramsey follower.
yeah, yeah, yeah.
And then
That's a
we
Ramsey
just had a
term.
nice little laugh about it. But yeah, it was fun.
Nice. Yeah, when I brought this up to my wife, I was like, "Hey, I think we're gonna do this YouTube thing because we want to help people." And she's like, "How are you gonna help people by getting them into more debt?" And I was like, "Oh, okay. That's the normal mindset of everyday Americans. Like it's hard for them to consider like this vehicle of a HELOC or a secondary mortgage like a HE loan is something to help your financial situation, because you are technically getting into more debt. But what most people don't realize is that you're consolidating high interest debt into a lower interest debt because you have a collateral, which is like your house behind it. So whoever's watching this, if you're struggling with high interest debt and you have good credit still and you have equity in your house, those are the ingredients that you would need to consolidate your high interest debt into a lower interest debt using a HELOC, a HE loan, or one of the other like 100 different products that our platform offers.
Yeah, absolutely. It's the time and opportunity you have, right? Every decision you make, like that coffee you bought today, you're just taking 30 minutes, hour, whatever it is from your day, your next shift at work to pay for that, right? So it's like I was talking to customers yesterday all over the country, right? Showing them what their spending habits was like. It's just like, how did you get from no debt to owning a home to care to suddenly having 10, 20, 30, 50, $100,000 in debt? Like that didn't happen overnight. It's something inside of your current day to day planning, life changes, growing family, for example, diapers, formula. It all adds up, right? So if you're not planning for it, life can surprise you, and then before you realize it, that debt has turned into a mountain, right? Or it feels like a mountain, like 30 grand in debt. That's like, if you're accruing interest on it, that's probably about 7, 8, 900 bucks a month on just minimum payments. So it's like when I see that, it's like, wow, you could take $30,000 debt, get a HELOC for that 50,000 or whatever it is to cover that debt, clean it up, have a little bit of a reserve, have a rainy day fund in case of an emergency at a much lower fixed rate than that variable rate from the credit card. There's your peace of mind, because now it's like you went from a $900 payment to probably like $400 payment. But this is the big but and the caveat. You're not supposed to make that minimum payment, because if you're really trying to get away from debt and making that lifestyle change and not putting yourself in that position again, you have to make the same payment you are making now on the minimum payments on the new debt. The moment you do that, that's where you start snowballing, and then you go from
Wait, that's a little.
having
You
that
said
credit
that
card
very.
minimum.
Can you do it again? Can you say that again, because it was very confusing about like how to structure payments. If you want to not, you can't just make minimum payments and then
Yeah, so it's
I
like you
didn't
just
get what you're
gotta.
saying.
Here's the simple way to look at it. When you have credit card debts and you have about 30,000 in credit cards, that minimum payment, if it's at 20 something percent interest across multiple cards, that'll be somewhere around like 800, 900 bucks a month on 30,000. Just simple math, right? And then if you take a look at that, and then you see a HELOC for 30 grand, you could take a 30-year term, but there's no prepayment penalty. There's no reason for you to make just that minimum payment of like 200 bucks a month. You need to take that same HELOC and that payment you are going through and paying the credit card companies with for 8, 900 bucks. You need to make that additional principal payment on your HELOC. The moment you do that, now you're paying that thing off in like 3 years and saving probably 100 grand in interest. That's the math I did for someone yesterday, because they were on credit cards like 30 something thousand, right? And then from there, it was just 25% interest, I think was the math we saw on it. And it was like about 8, 900 bucks. And then we went back and then we looked at a HELOC for 30 grand, and then that payment. And then once we reverse calculated the math, we were like, wow, you could make that same payment and be debt free in 3 to 4 years instead of 120 something thousand in interest, only paying 20 something thousand in interest, right? That's about
Wow,
100 grand.
that's crazy. That's so crazy. That's a hundred. Oh my god, $100,000.
That's money in your pocket, right? Dave Ramsey doesn't show that, right?
That's like, if you think about the other way, you're making $100,000, because if you just did nothing and you stayed the same course, you would have to pay that money anyway, or file
You're
bankruptcy, or
losing
fill
it.
your house,
You're
right?
stealing it from yourself, your future self. If you're
Oh
making
my
50 grand a
gosh,
year, you're working 2 years of your life to pay interest to the credit card companies.
that's
That
so
doesn't make
crazy.
sense.
That's so crazy. hundred thousand
That's you
dollars just
stealing from
by,
that's
yeah.
stealing from your future. Like we've said this so many times, right? That's money that could have you could have invested, right? Or that could have
Dude,
been
yeah.
you paying off 100 grand of your own mortgage, right? And owning your home sooner. So it's like half your mortgage if you're in the Midwest.
Imagine putting $100,000 into S&P 500 like now and then letting that vest over like 10 years. Oh my gosh.
Yeah, but that again, that's great. But you got if you have credit card debts or things that happen in life and like you everybody has a similar story. It's like I had great credit. I know you did because how did you buy your house in the first place,
Right,
right?
right. How did you afford
Like
your car and all
you
that stuff?
worked
Yeah.
so hard for it to get it. You struggled. You got there. You had kids. It's I get it. Cars happen. Like I'm going through the same thing. Like I'm on my second kid, and that's the crazy part because like you get a HELOC and now you're the bank for yourself because like you got to be responsible. You got to plan for it. You can't just live the same way. My point is this: it's like the way you were, the path you were walking, the way you were living, the way you were spending. If you weren't mindful of it until now, you need to make the decisions and really see what caused you to get there and make strategic changes so that going forward you don't repeat that mistake again. Because a lot of times, from what I've seen, people do it and the loan officer doesn't explain or spend the time to really get to know that person, in my opinion, and find a solution for them, right? It's an immediate fix now because your debt payments have gone down, but that little bit of advice on like how an additional payment could change their life, right? They're removing 7 years of a mortgage payment, 15 years of a mortgage, 20 years of mortgage payment. If they start doing this, you plant those, you help figure that out. That's where your future changes trajectory completely. And you have the opportunity for generational wealth. And you don't have to follow all those TikToks about investing or whatever to try to get an extra income to cover whatever you got, right? None of that works. I mean, it may, but none of most of the stuff I see just sounds scammy. So
Well, it could
it's
work. It's just people lack discipline, right? People lack the
mm,
discipline to like check their bank accounts regularly on a daily or weekly basis. And like what we talked about with our budgeting episode, right? Like put everything onto a spreadsheet, add it all
mm,
up. Why did I buy that? Why did I buy that? Did I really need this purchase? Did I really need that like Target trip, right? If you don't lack discipline, not even a HELOC is gonna help you. Like you're just gonna blow through that, and you're gonna be in a worse
mm.
off situation. So if you're not good with discipline and money, don't even get a HELOC, right?
You probably won't be able to qualify, frankly, if you're that
Right.
deep into it. I'm just being real. So it's like there's tranches, right? It's like 700 up, you're doing okay with your credit. 640 and 699, you're in fair credit range. And then if you're 640 below, it's challenging, right? But the crazy thing about the credit scores in those respects, like you're okay until you're not okay. And it'll go from like a 740 to a 640 because you maxed out a couple cards
Mm,
because life happens, right? You didn't have the reserves, you didn't plan for it. I'm not trying to scare you into it, but it just sucks because it's like if you prepared ahead of time, you could have had a couple different safety nets in place or savings or the HELOC because you had a medical emergency that insurance didn't cover and you had to pay the bill and you put it all on a card, right? Like stuff happens that are not in your control. So it's like, would I advise getting a HELOC just in case? No, I wouldn't. You'd have to have a plan for it. Like I talked
hmm
someone out of a HELOC yesterday, as crazy as it sounds, because I didn't think they needed that big of a HELOC based off of what their plans were. Because they're like, I want to consolidate. I want to fix the deferred items on my house and rental. I'm like, okay, what are those budgets? And we got to a figure, and I was like, that sounds about right. And then they're like, what's the max I can get? And I was like, possibly up to 4, 5, 750,000. But then I was like, what are you gonna do with that? Because like, well, if you have access to that much money, and I know you're good with your finances, but why do you need an extra $400,000? Right? It
hmm
doesn't make sense. Like if you take that, you're paying probably anywhere between $10,000 to $20,000 in extra loan fees for that. Even though you're not using it, why would you have that much access? Like it just
He
didn't
didn't have
make
a
sense
plan
to
for
me.
it, right?
Like it's like you have no plan for it. Plus the window is like 5 years on
Oh,
average
very
to use a
short.
HELOC for the
Oh,
drawdown
for the drop
period. So it's
period.
like if you have no plan to use 400 grand in 5 years, why are you paying for it? Does that
Yeah,
make
but if he
sense?
came up to you and said, "Hey, I'm going to use that 400 grand to put a down payment on a rental property," or like,
Yeah, like if you
I
have
want to sell
plans
my
for it, it
house.
makes
Yeah,
sense. Like I'm
right.
gonna
But he had
reinvest
no
and use
plans.
that like money. Like I'm an active real estate investor, and I have like 3 projects that I'm working on. Another person I
Right.
spoke to, as an example, they have a very nice portfolio in California, and they're working on another project here in SoCal. So that one was a really good purchase, a beach city over here, and it's taking a couple. It's a 6-figure renovation, so it's like, yeah, you need that HELOC, you need
Hmm.
that flexibility, you need to be the bank, right? And use that equity to enhance your portfolio, turn something else. It's like you have to have a purpose behind it. Like just because you can have it doesn't mean it's a good thing, you know?
Yeah. Generally, what I understand is if you have access to money, you're most likely gonna try to spend it. People are so bad at manage, like, being not tempted to spend money that they have access to.
But
That's
I would hope they're more mindful of it, because like a credit card's unsecured debt, it's like whoop-de-doo, like sound
But
like,
just that's what the evidence shows. That's what the data
yeah.
shows, that most people, if you have access to credit, like more often than not, they're gonna try to max it out, or they're gonna try to spend up to that limit. And
Hmm.
a lot of people are great with their money. A lot of people are great with being disciplined, but most people have struggle.
And a lot of people need second chances and a good reset, and a HELOC can be a good reset for you to help you get out, as long as you're planning, keyword planning, to get out of it, right? Or
Yeah,
make use of it.
and that's a great
Gotta have a
point. Second
plan.
chances, right? Like, you
Hmm.
can fix your credit. If you don't qualify for a HELOC now, you can make moves to pay off those credit cards, reduce whatever little debts here and there that are manageable, and then it's going to take some time, but you can improve your credit score over time in order to qualify for the HELOC, and then boom, take another step forward.
Like my advice is you have to find ways for your path, right? It's like there's a lot of information out there. So it's like if you only listen to one subsegment or one niche speaker, then it's like you're gonna get stuck in tunnel vision, right? Where it's like you don't see that there were other paths. Real estate is so amazing because that journey that we take, there's millions of different ways we can get to the final destination, right? It's like you can do it through short-term rentals, long-term rentals, mid-term rentals, Midwest properties, like West Coast, beach cities, mountain. Like you can mix and
Flipping, yeah.
match like all the pieces to your needs, your appetite for risk, right? So it's like that's the beautiful part of it, because like you have so many different people to learn from and hear from. And now it's like just because you hear it from one person doesn't mean it's the right path for you, because that might not be your like cup of tea. You just haven't discovered it yet, and you can't force yourself down a path. In my opinion, that it's like that whole like saying like that square peg in a round hole or whatever, like that in a round hole. It doesn't fit. You're trying to force your way through, but that's the thing. Like if you don't realize you're doing that at times and you're just forcing yourself down this path, like I got to follow this structure because this guru told me, or this is the only way to get out of it, or there's no other solution, just suck it up, let my house foreclose, or let my credit tank. I don't know, it's just so many different stories out there.
Thanks for watching, you guys. Remember, we're the Clear Close, the mortgage experts that help you get clear to close on your next mortgage. And we'll see you guys on the next one. Bye bye.